definitely a benefit to working with a broker as opposed to a lot of the retail lenders that take quite a bit longer to get the file through. So we have so many options available to us. So getting, like you said, if you're doing that before you even have a contract, we're not a lawyer state or an attorney state. So the realtors write up the contracts. But even then, we can get the contract, and even before it goes to the title company, after the realtors write it up and everybody signs. So sometimes we'll have it before we even have a fully receipted contract.
Hi, guys. Welcome to the Mortgages Made Easy podcast. I'm sitting with my great friend, Candy Williams, who's a loan officer out of Texas. And what we thought we would do just for some fun is compare notes about doing business in Texas versus doing business in my market. Many of you know that I do business in New York, New Jersey, Connecticut, and Florida. And, so much of the advice we give our clients is probably almost exactly the same. But I suspect that where the markets are today is different. So let's kick it off. Candy, tell me a little bit about your market. I know you're based in San Antonio, but how big is your market? What part of Texas do you serve?
Yeah, thank you. I live in San Antonio and most of my business is in San Antonio, but the metro area is big. I think San Antonio is about 1.5 million. And then if you look at the metro area, places like New Braunfels and Pleasanton and Bernie and lots of areas around. I deal with a lot of clients in those areas, and then of course occasionally I will work with clients in other metro areas, Dallas or Houston, or mostly if I'm outside of San Antonio, it's down in the Rio Grande Valley along the border, those kind of areas.
Hmm. And tell me a little bit about tell me about what is your average client look like? Are they first-time home buyers? Are they move-up home buyers? What does that look like?
So I would say the majority of my clients, maybe 60% are first-time home buyers. I do
Mhm.
a lot of work with first-time home buyers, educating them and everything. And then, the rest of it is investors or people who are moving up or who are relocating to Texas and buying a home locally. So yeah, the majority is first time, but a lot of others as well.
Yeah, I love working with first-time home buyers.
Me too.
There's something very rewarding about knowing that at the end of their quest, you've helped them do something. And, this is probably a good question, a good time to ask you a question. What makes you different than the loan officer at the local bank?
So I am very available for my clients and I'm very educational or education oriented. I want my clients to know what's going on all along the way. So I always tell them like, hey, if you are at a barbecue on the weekend and somebody asks you, hey, how's it going with your home buying? I want them to have an answer immediately. I don't want them to ever have to question like, I don't know where we are. I'm still, up in the air. And sometimes you'll have that with people who are dealing with a bank or a credit union or any kind of uh, retail lender where they're talking to somebody at a call center, for instance. A lot of times they have no idea where they are. But I always let them know this is what's happening now and this is what to expect. And I think that's so important for something that you've never done before, that you want to know where you are and what's going to happen next.
Yeah, it's like I we could trade seats and it would be probably almost, other than the fact that you're prettier than I am, it
Oh,
would probably be almost indiscernible because I could spend an hour or 2 hours on my first conversation with a home buyer
yeah.
just talking about the process, talking about what they need to know. And not only from a mortgage perspective, but often it's, well, have you spoken to an insurance person yet? What do you need to know about homeowners insurance? What do you need to know about home inspection? And I try to bring my almost 4 decades of experience into the conversation And I say you can call me about almost anything. And
Yeah.
that lasts for the lifetime of the relationship. And there are people who call me 10, 20 years out with questions. And, I don't always remember everything about them, but it's gratifying when I do. Uh,
Yes, absolutely. And I like to stress that to people and I check in with them afterwards and I tell them that I want to be your loan officer for life. You call me if you have any questions. And I do. I have lots of people who will call me about their escrow accounts a couple of years later, or they'll call me about property taxes, for instance. So I want that conversation. I want them to know that I am that resource for them. But like you said, during the process, just that initial phone call is so important because it lets them know what to expect during the whole thing. They need to know what to expect during the pre-qualification process when they actually find a house and have it under contract, what to expect after the fact. And I want to make sure that they know that I am available. I'm going to try to give them as much information as possible, but there is so much information coming at them during this time that they're not going to remember everything. So I also try to put it into writing. I send them emails about it. And of course, not everybody is, big on checking their emails, but they have the information. And then later on, they have something to refer back to, or again, they can always call me because I love getting those phone calls. That makes me know that lets me know that I did reach them and that they know that they can trust me in the future with any questions they have.
hmm. I, and I always say that the first 100 phone calls are free. So, like, and I'll say to them, it's very similar to what you did. I'll say, look, we're going to go through a lot of information right now. And when when you finish this, there's going to be things that we've discussed that you're just not going to retain. And it's perfectly okay. And then
Right.
your partner, your wife, your husband, your parent is going to have questions for you that you don't either we didn't discuss or you don't remember. And that's
Mm-hmm.
perfectly fine. If you authorize it, I'll speak to them. Or if you want, we could do a conference call to make sure that we cover it. Or you can call me as often as you want, and I won't bite if you ask me the same advice because it's just normal.
Yeah.
Uh, Let me understand your market better. Like, what is the average price of a home in San Antonio, and how does that differ if you go out to the suburbs?
I was going to look this up a little bit and I forgot to do that, but I think the average price in our area is around 400, which
Hmm.
is significantly higher than it was even 5 years ago. I would say
Uh-huh.
that we were probably in the 275 range, 5 or 6 years ago, and now we're at over 400. So it's a big difference. And that is the whole metro area on average. Now, different parts of the city and different areas of the suburbs are going to be different. You can go south San Antonio and probably find something in the 200s. And if you start going north of San Antonio, then the average probably goes up some. So,
Hmm.
but that's about the price range. I deal again with a lot of first time home buyers, so they're looking for the least expensive house, right? And so a lot of times I'll see that my price range tends to be around my average price, probably around 325 to 350.
Hmm.
So, which is a good starting price here for a lot of people.
And then your average home buyer, are they putting down 5%? Are they putting down more? What does that look like?
So, my average home buyer is putting down the least amount. So, again, with a lot of first time home buyers, they're putting down the minimum amount they can. So, on an FHA, 3.5, on a conventional 3%. So, the least amount that they can. And every once in a while, you'll have a client. I had closed a client recently whose parents gave him a good sized down payment. So that was helpful, but he wouldn't have been able to put that together if his parents hadn't gifted that to
Hmm.
him, which
Hmm.
is, another way that people can get those down payments together is with a gift from a family member. So we see quite a few of those. We'll see gifts of equity sometimes. People are trying to keep homes in the family, of course.
Hmm.
And so they'll get a gift from a family member for the equity in a property that's been in the family for a while or something like that. But
Yeah.
on average, I would say it's the minimum 3.5%.
Yeah. And my market is different. Our average, the prices range, but I don't even know the last time I did a home in the New York metro area under 500,000. Sometimes you'll get a
Yeah.
small condo or a small condo co-op, and it's not unusual to see something in a million plus. Um, and often a lot of my clients are putting down larger down payments. I'm still in a seller's market.
Okay.
We're still seeing bidding wars, and we're seeing, and that's part of the strategy that I bring to bear. But did I hear you right that you're in uh, a buyer's market right now? And let's define the terms.
Sure. Yeah. Well, so we are definitely in a buyer's market right now. We are seeing a lot of houses sit on the market for 4, 5, 6 months, which is, that's been happening for a couple of years now. And prior to that, we got so used to being in such a heavy seller's market, especially during COVID, that this is took some getting used to. But now we're really in a seller's market. So that means that the houses are sitting on that market longer. People are having a harder time selling them than they did in the past. So for my buyers, that means that they have the ability to negotiate. So the sellers are, they're more willing to negotiate for a lower price or to pay some closing costs, something like that. Whereas in your market, a seller's market, the sellers are holding the cards. They're the ones who have the leverage to get the price that they want and not have to offer anything in order to get their house sold because you don't have as many houses for sale. Would you say that that's the right definition?
Yeah, yeah, exactly. And one of the ways that's different is it is you win um, deals on the margin. And so what I mean by that is that often you have let's say two people making offers at almost the exact same time.
Mm-hmm.
First of all, you have to pull the trigger really quick. You go into
Right.
a house. I have a client who made an offer last week on a house that he didn't even get into because he had uh, best offer by Thursday, and he got the call on Tuesday, and he didn't have an opportunity to go see the house. So he had to make an offer on a $900,000 home, sight unseen.
Oh,
It's, and they're still in limbo a week later.
oh
Um,
my gosh, really?
yeah, but one of the things that we both probably do, and it's one of my favorite things, is I educate my clients about how to make their offer stand out. And I'll give you an example of something we've done quite often this year, which is um, we can start work as soon as we have an accepted offer. So before the contract is fully developed, before anything else happens, we can get to work. And so there have been a number of times over the last 12 months where we've actually presented a commitment to the buyer before they've signed the contract. And on a negotiating basis, that's basically the ability to say, this is the cash offer. Now, because my clients are often putting down 10, 20, 30, sometimes even more. One of my clients is putting down 50%.
Mm-hmm.
Because of that, we can do appraisal. We get a lot of appraisal waivers. So we have a woman who's closing on Monday, and in her case, the seller had been burned once, was really nervous about doing the deal. And what we did was as soon as we had the accepted offer, submitted the loan, got an appraisal waiver, and I think she's putting down, no, she's putting in a lot. She's putting out a big down payment, but 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 we get it also with 10 and 20% down sometimes. So
Right. Yeah.
being able to deliver a commitment at before the contract's written means that you can compete with against a cash offer and win.
So tell me what that means because in Texas, a contract isn't, or you don't have an accepted offer until the contract is written. So they write an offer, they write up the contract, send it over to the seller signs it or negotiates it, and they send it back signed, and that's official. We have a contract. How does that work where you are? How is that different?
So the realtor would transmit an offer to the seller, And if the seller accepts it, then it often, especially in my primary markets of New York, New Jersey, Connecticut, the attorneys that get involved and they finalize the contract. But there
Got
can be
it.
a period of 1, 2, 3 days, sometimes a week, sometimes, between when the parties agree to the deal and when the contract is written. But even if it's not, the fact that we have the ability, you and I have the ability to deliver a approval within 24, 48 hours. Now,
Right.
if it's subject to appraisal, that makes it a little bit different. But nevertheless, the fact that we have credit approval so fast, you know, um, I'm working on a loan right now which I won't say the name of the bank. I almost cheated, but uh, uh, where a major money center bank has been sitting on it for weeks and weeks and weeks.
Oh,
Um, we got a call on today's Thursday. We got a call on Tuesday night, developed the loan structure on Wednesday. We're hopefully going to submit this to the lender today. And then we expect to have at least the initial part of the loan approval tomorrow. So,
wow.
instead of 6 weeks of on the sidelines, we're talking about 3 days maybe.
Right. Yeah, definitely a benefit to working with a broker as opposed to a lot of the retail lenders that take quite a bit longer to get the file through. So we have so many options available to us. So getting, like you said, if you're doing that before you even have a contract, we're not a lawyer state or an attorney state. So the realtors write up the contracts. But even then, we can get the contract, and even before it goes to the title company, after the realtors write it up and everybody signs. So sometimes we'll have it before we even have a fully receipted contract, so that we can move it along. We know it's going to happen. We can move it along, and like you said, if we get an appraisal waiver, you can close that in a week and a half to 2 weeks. Whereas, even with an appraisal, a lot of times we're still closing them in 2.5 to 3 weeks, just depending on how quickly we're moving and which lender we're working with and things like that. So
Hmm.
that's an awesome way for you to win your contracts, or when the seller's over, is to get them that information up front and have that commitment.
And in your world, I bet you could do that before the seller has signed the broker commitment. So,
No, they still do. I mean, because we don't have a full contract, but we can have that within 3 days. So they have an option period, usually of about 7 days, and we'll have that fully underwritten and approved and can send it over. And I always make sure that I'm communicating with both sides of the transaction. The seller's agent knows what's going on. So they get emails saying, hey, it's underwritten. We have our conditional approval. Everything is good. And so that makes them feel a lot more comfortable, especially because it is such a buyer's market that the sellers can sometimes feel like they don't have any control over
mm,
anything. So giving them as much information as possible makes them feel comfortable moving through the transaction. And that always helps too. It helps to keep everybody working together and keeping the relationship between the buyer side and the seller side moving along and happy and healthy.
hmm. The other thing that differentiates us from retail lenders is our capacity to do different kinds of loans. So,
Yeah.
like you, in our conversation so far, you've referenced what I call conforming loans, the Fannie Mae, Freddie Mac kinds of loans. You've referenced the FHA loans. I'm sure you've done more than one VA loan.
A few. I am in San Antonio, so
Yes.
yeah, we
So
do get a few.
we can serve the active duty military as well as the veteran community. But there
Right.
are so many other things that I know I can do. So, like I always kibitz with accountants, if they ever have met a client whose economic reality is different than what appears on a tax return, because we can do a bank statement loan and get some
Right.
approved, even though, let's say, maybe in 2024 they had a terrible year from a profit and loss standpoint, but nevertheless, they had $100,000 a month of sales, and we can translate that into a imputed income and get a loan approved based on the bank statement. Or
Right.
if someone's buying an investment property and there are loan programs that are DSCR that are based on the income potential of the property rather than your personal income. There are, boy, I mean, um,
And when it comes to those type of loans, one thing that I always like to mention, because I did work in retail lending up until almost 3 years ago. So this is still pretty fresh to me. And I came across this recently where somebody told one of the realtors I work with, look, I am a retail lender, but I have the ability to broker. And so I had that also, but all that meant is that for anything that I couldn't do in-house, like conventional FHA, VA, USDA, those are all normal in-house. But if I wanted to do a DSCR loan or a bank statement or something like that, I could, but I had one lender that I could broker those loans to. And that's a very different picture than what we have, where we have tons of not what we call non-QM lenders, which means that they are those out of the box lenders, the DSCR, the bank statement, the profit and loss statement. We have so many options for people who do not have that traditional income. So if we're looking at, like you said, if we're looking at a buyer whose income on their tax returns, for instance, they're self-employed and their tax returns don't really reflect how good they're doing in their business, then let's look at other options. Let's look at bank statements. Let's look at 24 months bank statements versus 12 months bank statements. Let's look at profit and loss statements. Let's look at 1099. So there are lots of ways to skin a cat. And that is all of those different lenders have different options as well, different down payment options, different credit score requirements, because they're not required to do everything the same way. When you do a conventional loan or an FHA loan, all the lenders pretty much have the same underwriting guidelines. Occasionally, they'll throw in some extras, but for the most part, they have the same underwriting guidelines. But when it comes to DSCR or bank statement loans, they're all a little bit different. They all have their own requirements and their own rules. And so we can shop around and see if we have a lender that meets the requirements that that particular borrower needs. So, like you said, working with accountants and I have a good friend who's an accountant, and we talk about this all the time. And I always tell her, we kind of get into these little tips because I'm like, we need to show more income on their tax return. But Candy, they're going to owe so much money on their taxes if we do that. So this is another way around that to be able to do the loan a little differently. Works great for investment properties, but it also works well for home buyers, people who are trying to buy a home for their family to live in. So you're exactly right. As a broker, we just have lots of options, including lots of different non-QM options. So when I hear that retail loan officer say, oh, we can handle those, well, they can, as long as, again, it fits in this other box, not just the traditional lending box, but now they have the non-QM box that they have to fit in. And we have lots of boxes to fit in.
And then there's also reverse mortgages. I don't do many of them, but it's another tool in the kit for the
Yeah,
right person. So, yeah. And finally, I mean, what we find is that on our bread and butter loans, the FHA loans, the VA loans, the conforming loans, we're priced so much better than the lenders, than the
for
retail
sure.
lenders. And I guess the national statistics bear that out because someone who works with a lender like you is going to probably save $10,000 or more relative to doing the exact same loan with banker from Bank X. And it's a misconception that the person at the bank is going to take care of them. And boy,
Right.
we've seen that so many times this year where the bank just flubbed it and we came in and saved the day.
Absolutely. Yeah.
So this has been a lot of fun. I think we should do this again at some point. And we've been on the phone with my friend Candy Williams, who's a great loan officer from the great state of Texas, and San Antonio is her market. This has been a lot of fun. Thank you for joining me today on the Mortgages Made Easy podcast, and thank you so much.
Thank you for having me. I've enjoyed it.